come from Indian Institute of Corporate Affairs, representing Independent Directors Databank Initiative of the Ministry and IICA together, a major reform on the landscape of corporate governance. And we are here as promised during the last webinar. I hope some of you who were with us during the last program, I promise that the next program we will be doing on the subject of the role of proxy advisory firms, because what I find with my interactions with the independent directors and the aspiring directors, this is one area where they would like to understand more, perhaps not just for their own understanding or enlightenment, but also to have a better interface with the corporate governance frameworks, corporate governance practices of the companies. And as we all understand, like there is always in Mahabharata also there was a Sanjay. So what I personally feel, I don't know, three stalwarts are there. So proxy advisors, factually to my mind, I'm a Hindi medium person. For me, the proxy advisory firms act as a Sanjay to the entire landscape, or I would say the canvas of governance in the country, the progression of corporate governance, the directions in which the corporate governance of the country is moving. And it's very important to mention at this point of time participants have unmuted, I think, themselves, and we are finding a lot of noise. I would request all the participants to please mute themselves, because there are a lot of background noises and it would be difficult to run the business. Tara, can you intervene, please?
I request all the participants to please switch, mute their mic. Please mute their mic. All the participants, please, they are requested to mute their mic.
Okay. So, corporate governance is one of the challenge of the present days, especially when, on the one hand, especially because of this pandemic, are facing a big challenge of business continuity, or on the other, again, grappling with the issues which matches align with their own aspirations and missions to expand and grow world over. So on the one hand, there is a question of survival. On the other, there is a challenge of growth. And amidst this, there is a challenge of governing the company in a way so that it better aligns with the frameworks of corporate governance, the regulations, what all the regulators demand, and also matching and meeting out the expectations of the shareholders and other stakeholders of the company. Proxy advisory industry is comparatively of a I would not say new, but of a recent origin in Indian landscape, where initially the mutual funds and the institutional investors were invited by the Indian regulators to participate and pave the way for the shareholders so that they cast the vote, place their recommendations, they can be more judicious in terms of their decisions, and also put a scan on the practices which are going on across the entire corporate sector. With the limited time frame within which the Indian proxy advisory firms, of course, the size of business is not as big as we find in the West, and still there are a large number of multinational corporations who still rests with or who goes with the international firms. But there is not many contribution which has been registered, and I personally believe they have really acted keeping a scan, keeping a watch, monitoring the practices, reporting, informing the shareholders, giving birth to good shareholder activism. Of course, it is not so significant in India as otherwise we find in the West or other countries. So, with this, we thought of planning this panel, having three major players in the market. One is IIAS, which is started and headed by Mr. Amit Tandon, who is with us. Another is by SES Governance, which is headed by JN Gupta Sahab. And third is In Govern, which is headed by Shri Ram. And all these three are actively, like 24/7, rather, I would say, uh, working on helping the stakeholders, shareholders, on various aspects of corporate governance. And it is not just placing recommendations to the shareholder groups or the institutional investors who engage their services. They also act like as media act for reporting us on what all is happening around. Similarly, there is a larger role which I see, which vests with the proxy advisors of placing a good scan of the corporate governance practices, progression of it, and on timely basis placing their various reports in the domain so that the decisions could be more informed decisions. So I would like to welcome Mr. Tandon, Mr. Gupta, and Sriram in today's workshop, and you all participants. Now, if I would introduce Mr. Tandon, who heads and the founder of Institutional Investor Advisory Services India Limited. He has founded this proxy advisory firm, and he was also in past associated with Fitch Ratings India, which is one of the renowned global proxy advisory firm. He was in the capacity of CEO, heading that organization from October 2001 for about 10 years duration. Before joining Fitch, he was associated with ICICI Group for around 17 years, where he moved across various roles and shared his business acumen, interest, and keenness to excel in corporate governance and help others excelling in corporate governance across various verticals of ICICI. He had been a student of economics from St. Stephen's College, Delhi, and has also, to his credit, the master's degree in business administration from FMS Delhi and MPhil from University of Cambridge, UK. If I introduce you with our another speaker, Mr. JN Gupta, who is founder and managing director of Stakeholders Empowerment Services. It is a not-for-profit corporate governance research and advisory firm, and he has, to his credit, 43 years of very diversified professional experience while working with both public sector and private sector, with two very good terms in Security Exchange Board of India. Uh, in his first stint with Security Exchange Board from 94 to 96, he was heading a division of primary and secondary market. And then in 2009, he was associated as an executive director and was looking after market regulations, surveillance, derivatives, new product development. Uh, he was a member secretary of a committee headed by Mr. Vimal Jalan, former governor, Reserve Bank of India, and had been, SABI nominee on various committees. He is a BTech from IIT Kanpur and started financial analyst also. He started his career as a banker and later rose up to the level where he can establish an agency which is not for profit, not for what I know with my personal interactions, not for shaping careers of the people who are associated with him in this noble work, but also empowering stakeholders. Now, if I move on to the third expert of the day, Mr. Sriram Subramanian, he is a founder and managing director of InGovern Research Services Private Limited, which is termed as India's first proxy advisory and corporate governance advisory firm, and advising companies and investors on various aspects, including shareholder activism. He has around 25 years of global experience in the field of capital markets. Before starting in Govern, he was associated with Infosys Consulting, heading wealth and asset management, and he was engaged with consulting to global investment banks and bankers and asset management firms. In terms of qualification, he's a postgraduate in business management and a master's of science in financial engineering. He's also a member of technical advisory committee of NAFRA, which has recently been, not recently, a few years back, constituted by Ministry of Corporate Affairs. He's also a member of CI, National Committee on Financial Markets, and he remitted his office with this capacity in 2019. So I would again like to welcome all the three uh, honorable speakers, expert speakers, and the participant who had been kind enough in sparing their time and joining us, because your participation is felt like a collaboration for me, and I feel I'm not alone in this journey and holded hands with you all, and together we can make a difference in the corporate governance landscape. Now, may I request Mr. Tandon to unfold this today's session with his initial remarks as to what exactly proxy advisory firms are and what role do you see they are playing, including your firm, in the corporate governance space. So over to Mr. Tandon.
Thank you very much. I'm delighted to be here and talk amidst all of you and tell you a little bit about proxy advisory firms and what we've been doing. It's a subject which is very close to my heart, and therefore I welcome any opportunity to talk about it. Unfortunately, I've been given only 5 minutes, so I'm going to kind of keep it short and crisp. But you can be rest assured that given half a chance, I can go on and on talking about it. Proxy firms, as the name suggests, are firms who hold proxies on behalf of institutional investors. And what they've been doing, at least in the US, from where this term originates, is casting their votes on behalf of institutional investors. They have their origins in the US in the Employee Retirement Income Securities Act of 1974, which required funds to vote at shareholder meetings. So therefore, they're a relatively new addition to the investor support system, not just in India. In India, of course, they started in 2010-11, but globally also, it's not that they've got a history going back to the First World War or the Second World War and so on and so forth. Very quickly, while we are all bracketed as proxy advisory firms, the right way to look at the firms in India are voting advisory firms, because what we do is we don't hold the proxies, we don't vote on behalf of institutional investors, but we give them non-binding advice. That's very critical for you to remember. What we do is we study shareholder resolutions. We provide our recommendations to investors. The investors are then free to act on this advice, and they may choose to do so based on various considerations, various inputs which they are looking at, of which the recommendations of the proxy advisory firms are just one. I'm going to kind of say that when we started off, we realized that in 2010-11, there are fundamental differences between our market and the Western market. For one, and I think the most compelling difference between the two is the fact that in India, you've got a lot of promoters who run the business, and you've got a lot of promoter shareholding or controlling shareholders who own 40, 50, 60% of the business. In the US, other than a handful of technology companies, equity ownership is more widely dispersed and widely dispersed among institutional investors. As a consequence of this change in the shareholding pattern, what you have to remember is the fact that in the US, the dialogue is taking place between the institutional investor and the company through the medium of the board of directors. And therefore, the board of directors become very critical. And a lot of the discussion, dialogue, debate stems around what is the role of the board. As against that, in India, the debate is much more between, or discussions are much more between two sets of shareholders, the controlling shareholders and the institutional and the retail shareholders. And therefore, you would expect that there is an alignment of interest which takes place between the controlling shareholder and the other shareholders. But what the discussions try and address is instances where the controlling shareholder is using their shares to push through resolutions which benefit them at the expense of the other shareholders. Now, this could be related party transactions, this could be a compensation they pay to themselves, this could be in the instance of a merger which takes place. It could be in terms of giving a loan to one of your group companies, something which is kind of hit the headlines this morning. So therefore, the nature of the dialogue is very different. So when we kind of started operating in India, as one of the early movers, we realized that the form and shape of the dialogue in India is going to be very different from what has happened in the US and the UK, and therefore we'll have to chart our own path. And that's what we've spent the last 8-10 years doing. Which meant that there are fundamental differences in the way we go about our business. The first thing we started doing was that, when we set out our recommendations, they got picked up by the media, and the media kind of splashed it out. And we felt that, look, the right thing for us to do is let the companies also get a chance to react. So we started sharing our recommendations with the company before we sent them out to investors. This is not so that they can change our recommendations or influence our recommendations, but just so that they have a chance to react. And it kind of brought the proxy advisory and our role to the forefront as far as companies are concerned. Because, we can keep talking about it, but unless companies decide to change their behavior, we can't achieve much. So we kind of started sharing our advice. And I would say that today, globally, we are the only proxy advisory firm which is sharing its recommendations. And we are very clear, we are sharing it as a courtesy, not as an obligation. Opinions are ours, but the facts, of course, you are free to get back to. The other thing which we started doing was we started publishing our voting website. And these are available on our website. And you can all access these on our website. It kind of talks about what is the kind of information which companies should disclose, how do we think about it, and it also gives guidance to companies and boards how they should think about some of these solutions. The third thing we did was we started publishing a lot of research. Now, this could be event-based research. This could be data which kind of on the back of which we validated some of our recommendations. It could be some impact of what regulatory action is happening. And based on that, we kind of started doing a lot of advocacy work. Now, the advocacy work could be whether there needs to be more women on board, or it could be the fact that people need to display skill matrices on boards, or it could be even something how institutional investors behave in terms of the stewardship code. And of course, we've been kind of keeping track of some of these trends, setting benchmarks. And when I say some of these trends, what I mean is that, let's say the focus on ESG. So we started working with investors in terms of how do you analyze ESG data, what do you look at, how do you move forward. And we've been advising some of the, one of the largest hedge funds in India in terms of what they need to do. I realize I'm very cognizant of my time. So as I said right up front, I can go on for a long, long time. But I'm going to stop short here. I'm just going to, with one closing thought or comment, which is the fact that, from the time we started to now, we find that institutional shareholding, which was at about 20%, is now at about 35%. Equal relationship between shareholders, sets of shareholders. By that I mean institutional investors, and therefore we've played a seminal role in kind of fostering a debate between how they react to each other and how they ensure that what is happening in the company is happening for everyone's collective good. So with those few opening comments, I'm going to give the floor back to you, Neeraj, and to take forward from here. Thank you very much.
Great, great. It's really wonderful hearing you, Mr. Tandon, and I'm so delighted you have given us a couple of real good threads. I request the participants to please mute themselves because it would be awkward making a repeated request. I could find so much of background noise. Anyway, a very interesting thoughts have come, and what is encouraging, as you have just shared, the institutional investors' participation has gone up to 35%, and many more issues which would definitely be acting as a thread to take it forward in terms of the discussion when we have rapid fire questions or maybe questions from the participants. Now, may I request Mr. Gupta to please place his initial remarks as to how do he see the proxy advisory firm's role in India and how it is emerging over a period of time, making a difference in the shape of corporate governance for the country.
Thank you, Dr. Gupta. And after Amit's preliminary remarks, my job has become very easy because a lot of things he has already covered. But once again, I would make a personal request to all the participants, please mute your mic, or the administrator, please mute your mic, because I am seeing comments from many participants that they are unable to hear because of the cacophony. So please, in order to make everybody use this session well, please mute your mic because it is hurting everybody else. Okay. Now, as we started in 2012 as a not-for-profit company, our mission was very clear that we got to make a change in the country in the whole canvas of the corporate governance. And I can share the journey. When we started in 2012, when we wanted to talk to some company and we wanted to say, hello, we are SES, we want to purchase, so they will shut the speaker or the phone on our head and say, we don't want to talk to you, nothing else. But the things have changed. Things have changed so much that at least during the season, we get 100 requests from the companies for discussion before we release our report on suggestions and all other things. But as a policy, we don't discuss anything with the company before we release our report. And as Amit said that he shares his report with the company. As a principle, we do not share our report with the company first because it is the investors who pay to us. So our first thing is to investors. So we send our report to the investors as it is, and we send the report to the company simultaneously. This has a benefit. One benefit is that if we have made a mistake, my investor, my client knows what mistake I had made. I have no chance to cover up that mistake. The second is I cannot be pressurized by the company for any change because my report is already in the public domain. And if I make a change, then everybody in the world will know what change I have made and what is the objective for making the change. So that is this. Other thing is this, that we have always said that don't look us at a revolutionary, don't look us as an activist. We are a company which want to educate everyone, be it investor, be it director, be it promoter, be it any other stakeholder, for what is the good governance and how the good governance can be achieved. And do not look us as an adversary. Look us as a partner in your growth, because we are the people who have no interest in the company, but we want as an advisor to ensure that you appreciate what is the value of good governance and something. I would say in the 8 years, the biggest regret is that while the company secretary has started valuing our report, but unfortunately the matter has not reached to the board level. I do not think that many of the board members are calling for the report of proxy advisors and reading, whereas they must be reading it because it is the Janam Patri or that is the analysis of what is happening in the company. So like audit report, like internal audit report, they should make sure as a board practice that they should ask the company board to present to them all the reports that have been released by various proxy advisory company, so that the board knows what is the third party's view about yourself. I think I will stop there.
Great. Thank you so much, Jain Gupta Saab, for your initial remarks. Very focused, very straight, and one piece of advice which I could see again for the independent directors, because we have this group of independent directors or those who would rather be the first time directors, that it is important for them to look at the reports of proxy advisors as well, in addition to other reports, either they be relating to the financial matters or the non-financial matters. And yes, a couple of threads which I have received from your talk. Definitely, we would love to develop them further in terms of discussion. Now, maybe have the views of Sriram, please.
So good afternoon. Thank you for having me here, and thanks to IICA for organizing this forum. Firstly, coincidentally, InGovern was incorporated on 14th October 2010. So today, in a way, is a 10th anniversary, though we started operations on 16th June. At that time, ROC took more than 3 months to just incorporate. Okay, so our name, InGovern Research Services, prior to that, we had submitted to the ROC for InGovern Governance Solutions. So basically, we are governance solutions. Okay, we believe that we are the, I would say, the media or the intermediary behind engaging companies with investors. Okay, so that's it. So my background, I had consulted to global asset and wealth management firms. So I had observed global proxy advisory firms or even institutional investors send their annual letters to their investee companies. So the global pension funds, for example, who are managing trillions of dollars, send a letter to their investee companies on an annual basis of what behavior they expect of companies and the directors. So, for example, today's this one in globally is about climate change, about well-being of employees, etc. But so that is where in India we were noticing that initially there were a lot of transgressions from a perspective of, I would say, usually capital restructuring. That's when companies reached out to us, or investors were worried and voting against corporate restructurings, which directly impacted or where value was seen to be taken away from minority shareholders. But we were emphasizing on even regular appointments of directors, appointments of auditors, compensation issues, etc., should also be top of mind of investors. So slowly, the Indian mutual funds, as Amit said, over a period of time, the institutional holding in India has in Indian companies as a percentage has gone up. Right? I mean, mutual funds assets used to be 5 lakh crores at that time. Today, it's more than 20 lakh crores in the past 10 years. Insurance companies are behemoths now, holding almost 20 lakh crores again. So the key is that investors have started paying note to even routine matters like appointment of directors. So if we have good directors, then on the boards of companies, then at least the decisions taken will be much more holistic and in the interest of companies, right? So that premise, investors have to behave or ascend. Of course, now mutual funds hold almost 400 or 500 stocks in their portfolio. Okay, in India, only about 1,500 are even investable in India. 1,500 stocks are investable, out of which mutual funds hold 400 or 500 stocks in across their entire schemes. So from that perspective, if you see, it becomes important that they get very specific advice. So when we provide advice to mutual funds or institutional investors, so it's very specific, and the nature of issues is also changing. Okay, and it's getting very complex because, for example, a company does a ESOP repricing. How do investors judge it? Okay, the companies have the wherewithal or this one. In fact, the notice generally says that ESOP repricing is done from a company's perspective. They don't even give a detailed explanation of what is the impact on investors, because at the end of the day, ESOP is still a cost to the investors of the company. So these are complex issues. Of course, there are what we think that being compliant is hygiene, right? We expect all companies to be compliant with the law of the land. Governance goes beyond the compliance. It should be taken. Most companies expect that proxy advisory firms should only look at compliance matters. No. There are some issues that we deal with which are not even, I would say, regulatory related in that sense of from a perspective of where it's more a judgmental oriented, like valuation, for example. It's a slightly case of opinion. Okay, so over a period of time, these complex issues have come up. That's where we believe that we act as engagement, this one between investors and corporates. And you as directors obviously have a role to play in that sense of firstly, acting in the interest of the company. That is a big challenge, I think, especially when there are promoter-owned companies. We see various trades between promoter-owned companies versus MNC-owned companies, that is Indian subsidiary of a foreign corporation. We see various trades with SU companies. And obviously now there is a small category of companies which are, I would say, where widely held, where there is no single large owner of the company, right? Like L&Ts or ITCs of the world, etc. So these are the various trades of companies. I leave it at that. I think the panel can discuss more, and there will be issues that are raised.
Good evening. Again, I'll request to switch off their cameras. Nitin sir, your camera is on. M.R. Ramachandran sir, your camera is also on. So I would request to please switch off your camera. Rajesh sir, your camera is on. And please mute your mic so that there would be a better voice quality and the participants could take maximum benefit out of it. So I'm again requesting Ramachandran sir, your camera is on, sir. Hari Narayan sir, your camera is on. Rajendra sir, your camera is also on. So I'm requesting, please switch off your camera. Rajpal Vora ji, your camera is also on. So there's a humble request, please switch off your cameras.
Okay, great. So we'll just have the panelists on the screen. I'm sure everybody would appreciate our request. So thank you, Sri Ram, for a wonderful initial remarks. So after hearing from the three stalwarts and the proxy advisory industry in the country, which has a very growing future, and of course in this short span of time in last 10 years we have really seen a very passionate kind of work, and I'm sure all the participants, after hearing to Mr. Tandon, Mr. Gupta, and Mr. Sriram, must have seen one thing. Of course, the perspectives are different, but there is one thing which is common: the passion to make the shareholders and the directors much more informed, placing the best possible kind of research after engaging with the companies, helping the companies and helping the stakeholder groups in moving beyond the level of compliances which are required by the stakeholders. So there are many more common things which I see between these three. And yes, there are different threads which we can take up further. Now, in terms of some very quick questions and quick perspectives, as the speakers also understand, this is a new initiative about establishing independent directors databank. And if I would be allowed to share, we have more than 22,000 directors registered with us, and more than 1,650 companies, mostly listed, registered with us, who are constantly searching for the professionals who are trained, who are well exposed to the governance framework and practices, who are also certified and tested in terms of after qualification of the test, or maybe exempted if they have that particular kind of experience. But one question which oftentimes in almost all panels which we do come across is a big concern about independent director, because as both all the panelists, I would rather say, have showed this concern that India is a country which is primarily dominated by family business, and there is always a concern by those who have a desire and passion to serve the industry as an independent director, and their concerns of getting picked up by the companies. So I would like to ask Mr. Tandon, what is his observations, like how do he see, what do really the companies see in a professional to be picked up? Of course, it's a job associated or related to the nomination and remuneration committee, NRC, of a company, but what do they really look for in a person to be considered for this position? If you can share with your experience. Mr. Tandon.
Yeah, sorry, I needed to unmute myself. Look, what you're asking is a fairly difficult question, but let me kind of answer it. It's going to be some sweeping generalizations, but we know that one size doesn't fit all, and therefore we need to be context specific. But at the heart of what I'm looking for on the board from its directors is someone who can exercise judgment. This is very critical. I know we are sitting with a bunch of people who've cleared exams, etc., etc. But if we were to kind of say that, look, that is just one part of what you need to know. From a company's perspective and from an investor perspective is that you've got people there. Are they exercising their judgment and are they exercising it for the benefit of the company? That is very critical. The second is their ability to balance between the conflicting demands which the controlling shareholder might put and then which is there for the institutional investors. And again, if you come sift through everything, judgment comes into play here itself. If we kind of take this into account, then of course there would be some secondary level things which you want. You will want the right skill set. So the company can decide whether they would want someone who understands HR issues or technology or legal. And therefore, they bring in the right mix of people or board members who have this understanding. The second is someone who has knowledge about the industry. Oftentimes, other than the CEO, or maybe two people from the promoter family, you may not have someone who understands the business or the industry in sufficient depth. I think it's very important to have that and have that perspective which comes into play. So again, and then of course you can kind of drill a little bit deeper and say communication skills and presentation skills and network and so on and so forth. But this is it. Now, to this, I'd add one other factor, which is it's good for boards to have some people who've actually run businesses and run P&L accounts. Because unless you've run a P&L account, for you to be able to comment on something, your judgment, and it kind of comes back to judgment, which I mentioned. Your judgment on a lot of issues may not be up to scratch in terms of what is expected on a board. Because again, if you've run a business, you've kind of balanced between the various pulls and pressures, the competing demands on time, on resources, competing goals, and you should be able to manage that if you've run a P&L account and P&L account successfully. So I'd say judgment, your ability to have run an account, domain-specific skills are the three important items which I would look at. Back to you, sir.
Great. So now it's really interesting, like, having a fair understanding of the financial statements and, fair amount of objectivity involved in terms of passing a real honest and fair judgment is something which definitely company looks for. I would like to go to Mr. Gupta for his perspectives as to exactly what now I'm turning the table and what exactly is really needed from a professional to prepare himself or herself for a position, and what could be the way that a person can come in the limelight, that he be considered, because it's a larger concern for the Databank members as well, as to how do they really network and all. So may I look the other perspective and would like to know from you as to what should a professional do to make himself or herself ready for that. Gupta ji.
Gupta. Thank you, Dr. Gupta. I think you have asked the toughest question of my life. Okay. Because the question is very simple. It is like this: when I start after completing my graduation or something, how do I market myself to get a good job? So same in the situation where after passing the independent director's test, and among the 22,000, as you have said, how do I market myself to ensure that I get a good directorship? Now you got to read or understand what Amit talked and then what I am going to talk. Amit talked basically very simple, that I should have the ability, if I want to become a director. Mere passing the test is not enough, because test is only testing one set of skill. But the most important is this: there should be ability that is in me to understand things, or I would say that most important thing is the common sense and ability to withstand pressure, ability to do something. But then even up with all this ability, how do I market myself? The only way is that you have to start from somewhere. See that your friend circle or your people whom you know, they know about your skill, they know about your ability, and you can start discourse, you can start a chat group or something where you can spread knowledge. Once you start spreading your knowledge, people will feel that you are the knowledgeable yourself, because without that depth of the knowledge, you will never not be able to spread the knowledge. So there has to be many ways in order for you to make yourself bring into the limelight and ensure that attention of the prospective companies which are looking for prospective candidates are falling upon you. I think that is the best way to market yourself.
Great. So I'm going to Sriram. See, I'm sure we all know that SEBI, after looking at the recommendations of the Uday Kotak committee, has come up with in agreement to many of the suggestions. And there is one important thing. There is a disclosure which is a part of the mandatory requirement on the part of companies to disclose the skill set of the directors they have and others. So how do you see, what is your experience, especially in the family governed companies? They really are concernful in terms of the skill gaps they have, and they really look for the kind of professionals whom Amit is talking about or JN Gupta is talking about. So what are your perspectives on that? Like, how much are they really passionate in terms of really identifying the gaps and reporting the gaps and then finding a person? The family governed business organizations.
No, I think you have to go back to the spirit of those regulatory requirements. At the end of the day, it is in a company's own benefit to have diversity in the board, diversity of skill sets, diversity of experiences, etc. Right, amongst the members of a board. There's no point in having a board of 3 members, for example. That defeats any discussion, or that doesn't permit any discussion in boards. So we ideally think that the board size should be 6 to 16 or 6 to 15. I mean, these are rough numbers anyway. So, but it should be large enough to permit you knowledgeable discussion, and small enough not to just have people hanging around in seats. There are boards with 20 directors. That defeats the purpose. So there should be diversity of experiences also. In fact, we were advising, I mean, as a governance advisory firm, we advise companies also and directors also. So we were advising a Ahmedabad-based company, and when they came to us, there were 6 directors on the board, of which 3 are from the family members and 3 are independent directors. And the independent directors are CAs from Ahmedabad, and this firm aspires to have 50% export revenues of global market. If no director, no independent director had any experience working outside of Ahmedabad and or with global experience. So how do you expect such a director, who all of them CAs also with no diversity of skill sets, to understand what are the nuances of global economics? Because if the company is aspiring for 50% export revenues, their supply chains, right from happenings in China to happenings in Mexico to anything, can affect your revenues dramatically. So that is where the diversity of experience is important for the directors. So irrespective of whether there is a regulatory requirement of adding to the this one, the annual report of what we see, even one has to be forward looking in a way. That is, much of the company will appeal to the youngsters, for example, or women, for example. So does the board have a representation from those kind of diversity or members? So today, for example, how do you engage with users who are fairly young? Today, social media takes a very big impact. So do directors have these qualities or understanding at least? All these matters. And as one of the panelists, Mr. JN Gupta said, it is important for directors also to keep themselves abreast of happenings around the world in a way, or trends which impact the business. I mean, today, for example, who expected that 6 months back or earlier this year, we would have work from home? Nobody thought of that companies would have to transition to 100% work from home. So no company, including the largest IT services firm in India, Infosys, etc., they only had 5% or 10% of their people working from home till earlier this year, and they all had to scramble, scale up to 100% work from home kind of a situation. Many companies also had to scale up, customer engagement, make it completely digital. How do I win customers digitally? That became their core strength. So this is the how do you as directors think of attracting customers digitally? So these are the challenges, and it's not that the challenges as we see in this one, the black swan of Nassim Taleb. The future challenges are completely different. We don't know what will the future challenges be. So one has to keep abreast of these challenges. That's where I leave it.
Great. So thanks for your perspective, Sriram. Now I would take up one, the thread which has been left out by our expert speakers. There are a couple of issues which are a big concern, again, for institutional investors and the companies as well, and that's how they are trying to align themselves. And I've seen a lot of changes which are happening even in the public sector companies when they start talking about ESG and other aspects. Because so far, as per the Companies Act, we had been talking about Section 135 and CSR regulations, but the moment institutional investors chip in and we find, private sector more conscious about those areas, because we all talk about the global best practices, and that's how we try to align our practices. And Amit has very well mentioned about it. So what do you think, Amit, because I have kept a track record of there are 250 public sector undertakings who are presently operating. Of course, not all of them are profit making. If we look at the public enterprise survey, they are they are significantly less who are really contributing back to the government as the primary shareholder of those concerns. So I would like to have your reflections on the consciousness, rather your consciousness in terms of the ESG thing in public sector and the private sector companies, because that's one thing which is again critical for independent directors, having them heading the CSR committee and all.
Okay. Sure, thanks. Neeraj, one of the things I want to begin by saying is that we need to make a distinction between CSR and ESG. I know we are still kind of coming out of the CSR mind frame and getting involved in ESG. But my sense is that even now when we go and meet a company and talk about, what are you doing in ESG? The first thing they say is, okay, let me call my head of CSR to talk about it, because they're two completely different things. Now, we can, again, ESG is a topic which one can talk a lot about, give you a lot of color. But all I'd say at this moment is that where we are in India is a little bit important, is that we are all kind of trying to find our feet. Investors are trying to find their feet, and companies are trying to find their feet, as are regulators. We've just seen the fact that the MCA has kind of come up with guidelines in terms of what the reporting should be. It's been picked up by SEBI. They've come up with a 55 page set of disclosures which need to be made. My sense is if you begin with 55 pages, you lose the crux of it. You should begin with 25, 30, 40 data points which are critical, and then build from it, rather than turn around and say, look, these are the 500 data points, in which case it's going to get pushed down to the lowest level. So that's the one way of looking at it. As far as companies are concerned, they again are grappling with the fact that, look, you have the reporting standards which are there. Which one do we follow? We've got business responsibility reporting. What do we do? We've got our sustainability reports to do. And therefore, again, I think in that, a lot of it is getting lost. And of course, investors are saying, look, there's so much information out there. What do we decide? What is critical? So we actually, when we have our conversations with companies and we have our conversations with investors, and to the extent we are talking to regulators about it, we keep kind of telling them that you need to remain focused. You need to remain focused on a few key data points and a few key themes. Those themes may be different for different people. For let's say an auto company, it could be carbon. For a bank, it could be e-waste and maybe lending to certain strata in society. Or they could also say something like, look, when we've got ATMs, how do we move the ATMs to run off renewable energy? So there are certain key themes. Now these could be themes. And the same is for investors to say that, look, what are we focused on? And if each of them were to identify and look at the key themes and then pursue it and then start broadening how they're approaching it, I think it's going to make life easier for everyone. Given the fact that you've got such a marquee audience and so many people, my suggestion to them is that, look, all companies are preparing business responsibility reports, sustainability reports. I've actually often gone into met up with board members, gone into boardrooms, in forums such as this, asked how many people who are on the board who have seen a sustainability report, or how many of those reports have been brought to the board before they're released to the public. And the answer is it's less than 1%. So I think all of you should also be a little bit conscious about the fact that, look, this is the direction in which the investors are going to move, regulators are going to move, and companies themselves are going to move. And therefore, you should ask for this information and immerse yourself into what is going on. So, and just a closing comment, people have been saying that, look, we need an IT expert or a lawyer. We are not very far from a time when you will want someone who kind of understands ESG. I know it's a blanket term, but understands ESG a little bit holistically. What is happening? What are the trends? What are the questions investors are asking? And therefore, for boards to have someone either at the board level or sitting just outside the board who will be able to have a meaningful conversation with regard to what companies are doing on ESG.
Great.
Thank
Thank you, Amit, for such an insightful thought. And I know, I'm very much aware in terms of your initiative of, developing the first ever scorecard in the country with the help of Bombay Stock Exchange and International Finance Corporation. I mean, that's one organization. Both of them are there with whom IICA works, and I personally am associated with Mr. Chauhan and Vyadislava. So, taking a lead on to it, specifically recognizing and appreciating the importance of ratings on the corporate governance practices, because that is something which just not show the mirror to the companies in terms of where exactly are they placed in the sequence, but also I take it the other way around, considering it as a big opportunity to look at the factors where we can really improvise and we can rise in the ladder, and also portray a picture which is much more appealing and exciting for the institutional investors and of course the foreign institutional investors. So I'm going to Mr. Jayan Gupta to ask a very simple query of mine which often bothers me. How Mr. Gupta feels that ratings of corporate governance of Indian companies are really important, because that involves the ESG, that involves their ESG consciousness, that involves their governance consciousness, that involves their compliance consciousness, that involves their performance consciousness, because it is a 360 degree of rating, and Amit has done it for with BSE and IFC. So I would like to hear from Mr. Gupta how far such ratings are really important, and there is a big clue for independent directors to learn from, the outcomes of such reports, because they seem to be very precise, but they seem to be like dohas of Kabir, which I would say, which are very small in terms of a pinch, but really larger in terms of an impact, because that is something which shapes the future. So I would love to hear the perspectives of Mr. Jain Gupta in terms of corporate governance index or corporate governance scorecards, or tracking of those things which really pose a big challenge in front of the companies and the directors, and where they could really excel and look into. So I would love to hear, Mr. Gupta.
Thank you, Neeraj. I will first say that the difference between the governance index or governance card that my company or Amit's company makes versus other rating is a difference in that in most of the rating cases, it is the person who is rated is being paid. So there is an inherent conflict of interest, because that person, the company pays for the rating and the rating agencies are giving the rating.
That's right.
Whereas in our case, in whoever is a subscriber to my corporate governance score or something is not the company itself. We give to our clients who use it for their investment purpose. So that conflict is missing from our system, and that is a very big advantage over any other rating or scoring system. The second thing you very clearly said, the independent directors. Now, what is happening is that independent director or maybe the entire board is working towards something and trying to improve the governance. And they have been accustomed to reviewing themselves that where do have they reached or where have they reached in their plan. But our score will give them a outsider's perspective that what you have planned and what you have achieved. So there will be an analysis which will be done by an independent third party who has not been paid by the company, but by some investor to give you a perspective. So what the company should do, the company should always read our reports. We are ready to share our reports free of cost with the company if we have done it for the client, that what is our rating, so that they understand where they are. And the third and most important thing, I will say that unfortunately in India, this concept is yet to seep in. People are not appreciating the value of governance score or governance rating, whereas governance is, in my opinion, more important than the financial statements or securities, because an excellent company with an excellent finance is certainly going to go into the dumps if the governance of the company is not good. Whereas a company which is weak can become strong because of its governance. So one has to appreciate the governance as much as people appreciate the management or the financial or the securities or the product or investor, whatever it may be. But governance is a very important tool for growth and success.
Great.
Dr. Gupta, let me come in since, just since you spoke about our scorecard. I thought it's a good opportunity to just share a little bit about the scorecard.
Sure.
So, the starting point was that, look, it has to move beyond compliance, because we all keep saying governance is not just compliance, it's not ticking the box. So while it rests on compliance, it kind of moves beyond. And let me kind of just give you an example. So since it's a scorecard, you score. So let's say one of the items on which you score is that, look, companies are expected to now have a dividend policy. Do you have a dividend policy? So yes and no. If you don't have it, you score 0. If you have it, you score 1. But then you kind of take it to the next step and look at the dividend policy. So, do you have a payout ratio? Have you paid along the lines of your payout ratio? If you have, then have you articulated these reasons very well, and therefore you score higher points. So this is the way it works. So whether it is this, whether it's the board composition, whether it is other disclosures, whether it is dealing with stakeholders. So this is what happens. So therefore, to kind of reach pass marks, which are 50, are relative easy for a lot of Indian companies to do. It's the gradient which kind of builds up from 50 to try and reach 60, or from 60 to 70, or 70 to 80. That becomes progressively steeper because you're looking at companies repeatedly doing something which is expected of them. Our own experience from the past is that, look, companies with higher governance scores have lower volatility. It's very difficult to say that, look, they all kind of outperform the index, etc., or they do very well. But we can make a couple of assumptions. One is during bear markets, they don't fall so much. The second is in all markets, their volatility tends to be a little bit low. And the third sweeping observation we've had is that companies who are kind of better tend to kind of continue to do better. So companies with higher scores will continue to improve their scores, and those with weak scores continue to drop. So it's something to do with the culture or the DNA in the organization as well, which is why you would see such a pattern emerge. But back to you.
Right. So it's an interesting perspective to add on. I would like to go to Sriram on this scorecard thing and ranking of companies, because this is something which really not just help the foreign institutional investors, but Indian institutional investors and also the directors who serve on the board to, in terms of, excelling into the practices and bringing more effectiveness to it. So I would like to learn from.
तुमने सांप को हेलो नहीं बोला?
Have you spoken to the
No. What did it happen?
So I would like to learn from Sriram. What does he see? Is a prospect that there could be something in future in terms of a scorecard or in terms of an index which would really help, because India is a country which has a very dispersed ownership, and as Amit has also very well mentioned, of course, the institutional investors shareholding is increasing, institutional investors stake is increasing, but still activism level is very less in India. So I'm sure those who are the conscious investors would definitely would love to have a authenticated scorecard or indexation in future. So how do you see the prospect of it, Sriram?
Yeah, I think one shouldn't get overly enamored by the absolute scores in the scorecard, right? I mean, those are anyway the goalpost will keep changing year on year and those kind of things. I think what is important for companies and directors to appreciate is the relative scores in a way. I mean, where do you stand vis-a-vis your peers? Where do you stand vis-a-vis the best in India, say, for example? Okay, for years since I started my career, I think many, even Amit may have started his career in the 90s. Infosys was considered a bellwether for corporate disclosures in India. They set a benchmark which are far beyond anything else Indian corporates knew. Okay, so from that perspective, you see, I mean, you have to benchmark yourself vis-a-vis the best in India. So I think that is important. So absolute scores themselves do not matter. What matters for a company and for directors of those companies is to see where do they stand vis-a-vis governance practices, one of their peer set. Okay, if you're a tire company, what do the other tire companies in my industry, what governance practices do they follow, and where do we stand? That is important. Is because governance standards need not necessarily, governance practices need not necessarily be industry specific. they are, of course, the environment specific, and the environment here is India. Okay, and so vis-a-vis Indian corporates, where are we? Are we doing better on disclosures? Are we doing on how better on investor engagement? So that's where, if you see, there's a huge gap in terms of how, especially practices. Of course, everybody says we are doing very well, and they come out with all disclosures when things are going good. It's only when during times of distress or when things are not good, how do you retain the investors' trust? That is important. And I think the character of a company will be determined and in those moments. Okay, so we go back in history, see each company's characters only at moments of distress. Did they actually come up with disclosures? Did they actually say what exactly transpired? And then they were honest about making mistakes. Then they came and engaged with investors, and that held them in high regard vis-a-vis investors. And I think that is a lesson, this one. I remember, for example, in 1996 or so, when Infosys had come out and they had invested their treasury capital in stocks, and their stock portfolio crashed in the 1996 crash. And then they came and admitted in their quarterly meet that, look, we don't understand stocks. Henceforth, as a policy, we will not invest treasury income in direct stocks. We will invest through mutual funds only. So that was a very bold and upfront statement to make. Similarly, in 97, they lost their biggest client, GE, which was contributing to 25% of their revenue. Imagine 25% of their revenue, and then they walked away, and they with GE as a client, because GE was pushing with hard on them. But they were upfront about it. They did not try to hide anything. They had a fairly good rationale, and the fact that they were upfront, they were very forthcoming, sort of, I would say, was refreshing in the Indian corporate environment, and the investors really liked it. So obviously, Infosys during the IICA days of 2015, it's not that every company can be painted or held on a pedestal. I would say that over a period of time, situations determine and the responses of the companies determine how investors treat companies. Corporate governance scorecards also should be seen from that perspective. It's a momentary thing, and it is relative to other companies.
Yeah, so two interesting things I'm picking up, like, for our participants, which are audible, Sriram? Sriram, am I audible?
Yeah, it's audible.
Yeah. So there are two beautiful things which I'm, picking up for my participants. It's more about, articulation about the character of a company and having a trust with them, which is really, really significant, both from the independent writer's perspective as well as from the promoters or, the company perspective who really brings a professional on board. And yes, a scorecard is a phenomena which is comparatively new, which IIAS and ICC has brought to the country, but yet to establish, because that has a limited interface in terms of studying a couple of certain set of companies in terms of market capitalization, because that has a limitation, and of course not all institutional investors or the individual investors can get benefit about it. And as you must be aware, I'm sure I don't have that much knowledge, but you being in the industry, we have very diverse and dispersed shareholdings, and the knowledge in terms of shareholders are not so well that they take help of it, and they're not so that well informed. But yes, what I see is governance scorecard has a bright future in times to come, and is going to be a big reference point for both institutional investors as well as individual investors who are really the informed investors and not just uh, investing on casual advices or advices of the advisory firms as to where do they invest. So that is something which is yet to come up. And yes, independent directors have a big role to play, because it is all good to be informed in a 360-degree way, not just looking at the reports, not just scanning terms of company, not just looking at the regulatory framework and understanding the regulatory and role responsibilities, looking at the reports of the proxy advisory firms, but also using a gut feel and own understanding and expertise, so that more effectiveness and value could be added. Now, taking it further, of course, it is 5:45. We can take up some question, but one last question, which I would love to, hear a very quick, very short, very crisp kind of perspective from all of you is, how do you see corporate governance from an independent director's perspective is progressing in Indian landscape? And for that, I would like to invite Mr. Jain Gupta first. Mr. Gupta?
Neeraj, can you repeat your question? I just missed some.
See, independent directors, because I interact with these 22,000 independent directors on and off. They connect me over the phone, they connect me over the mail, and they have a bigger concerns like India has lack of professionally managed firms and more family-driven concerns. There is a big challenge in terms of really independent people being picked up, or even after picked up, they really have a challenge to place their voice or being heard in the board. They really have a challenge to mark their contributions in the board. So, how do you see, how do you see the future, or how do you see the present status as to in last 10 years, the corporate governance in India has progressed and is more aligned with global standards? And that is from the independent director's perspective, because there are a lot of responsibilities which are considered to be a big onus on the shoulders of the independent directors.
Okay, so I would say the first in last 8 years, I have seen lot of changes that people are really concerned that what is happening. But then the question that you are asking, that how can independent director make sure that they are heard, they are able to perform their duty? There cannot be a solution which can be given in a webinar or something like this, because it will depend upon the person himself, how he makes sure. The problem is that in our country, there is something like a fear factor, and that fear factor is the biggest problem. What happens, independent directors feel that if they make a lot of noise, then they may not be continued or they may not get reappointed, so they prefer to see silent.
Yeah, that's right.
Other extreme is that we feel independence in opposition. So if the promoter says east is on this side, the independent director has a duty bound to say no, east is on the other side. No, that is not. The role is not of a confrontation. The role is aligning and making sure that the company goes into the right direction. The value is created for all stakeholders. Unfortunately, either we act at the one extreme where we feel it is the confrontation. On the other hand, we feel that if I speak, I may not continue. Now the law has given you minimum 5 years term, because before 5 years you cannot be driven out of the company, whatever you say. But then I would never say the confrontation is the right thing. It is only you got to make your point and make people understand that what you mean is the correct. That is one. But I will tell you the Indian mindset is very, very difficult, because Amit knows that we were part of a panel, we were part of a committee, and there we were the people who were making a lot of questions. And jovially, I had asked a question that how many of you present in this room would want me as an independent director? And the voice was none. Nobody wanted me as an independent director because I will speak my mind. So we have a problem of our character, we have a problem of our heritage. It will have to be changed, where if I oppose you, if I say something against you, it is not necessarily meaning that I am not interested in your welfare. It could be a case that by questioning you, I am directing you to the right direction, whereas that your benefit is involved. So we will have to bring this gap into zero. Otherwise, we will continue at the two different end of the spectrum. Over to you, Neeraj.
Okay, thank you, sir. Thank you for your perspectives. Amit, I would like to ask you one, very quick perspective. Independent directors in India, and what I see, especially as part of the key objectives behind this data bank, to help professionals network with the companies and give them more opportunities, so that professionals also get opportunities and companies also find good professionals on board. So there is a strong conundrum in the mind of the people, because till the date they don't get opportunities to be considered, they get curious about it, and the day they start getting opportunity, they get curious about something else. They get worried as to uh, mm, uh, you know mm, they should not face those kind of things which comes as part of the regulation, as part of the implications, which may cause them something adverse. So what would you like to give as a message to the independent directors of our data bank, like they need to be cautious about, or they build a safety net around?
Look, it's very difficult. As we were discussing, it's like after you've graduated, you're looking for a job. So it's, you don't know what is going to click and what will play out. But you raise a very interesting, a very right point, Neeraj. The fact that, look, becoming an independent director is not an unblessed, it has its downsides. And with the passage of time, when you look at it, the downsides have only gone up, they've not come down. Earlier, it was prestigious to be on the board of a company, particularly of a listed company. There was some of the perks which were coming with it. Now, increasingly, the responsibilities are there. And even as the responsibilities have increased, the scrutiny which you are under, and, I'm not talking about shareholder scrutiny as much as scrutiny by regulators and by, unfortunately, the income tax department, the enforcement directorate, and all of that. So, it's all very well to say, look, I can take the test, I can contribute. But you weigh in these pluses and minuses before you do it. And a large part of it is also, your ability when you're going in to ask the right questions. First is when you're joining the board, but once you're on the board, continue to ask the right questions. At that stage, you need to have greater awareness. You need to be speaking to the people in the second rung of organizations to find out what they're actually doing. And at the end of the day, it's something which we've often spoken about, which as a independent director, your role is to promote, protect the or save the promoters from themselves, because they are going to be wanting to push the envelope, do what they believe is going to benefit them, get onto a faster treadmill. But if you're on a faster treadmill, you could have you could collapse because of your health can't cope with it, or your heart can't cope with it. And therefore you have to be sure that, look, once you're there, if you've decided to join the board, what are you doing? But equally, before you join the board, do your due diligence, speak to have a frank conversation with the promoter in terms of why do they want you on the board. What value do they expect from you? And also say, look, this is what I think I can bring, and these are the pluses and minuses, and it's better to draw out those boundary conditions up front rather than get onto the board and find that you're getting pushed around and you're being asked to sign papers or take decisions which you don't necessarily agree with. And then, having joined the board, you find it a little bit embarrassing to step out after a short period of 3 weeks or 4 weeks or 4 months.
Thank you, Amit, for an interesting perspective. And I'm taking it further from where you have left. I would love to go to, and that's going to be my last question of the day, to Sriram. Like we see many directors have resigned, and many more say that they are resigning because of the health reasons. Some do explain the real reasons, some don't explain the real reasons. Maybe some reasons, as you have very well mentioned, that once you find embarrassing working in a board, you feel to decide to leave a board. So I would love to hear from Sriram, because I come across with a lot of professionals who are so keen to join a board and so passionate to perform, and undoubtedly they have the kind of skills, they have the kind of passion, they have the kind of commitment, they have the kind of integrity and objectivity and ethics to really perform well in the board. But still, things get complex at times, not just because that you don't possess the right skills, but you find the situation so complex that you decide that we don't want to act any further even after we chose ourselves to be on the board. So if Sriram could highlight where is the challenge more in Indian context? Is it with the independent directors or the women directors, or is it with the companies where the situation becomes more challenging for the independent directors?
No, if I understand your question correctly, I mean, so how do independent directors or directors now, some of them, these participants, take on roles of independent directors, right? I mean, I think the biggest risk individually, as Amit said, see, the regulatory requirements from independent directors has only increased, if anything. And in fact, in some cases, personal assets have been got frozen also in some of these scrutinies and various regulatory actions. So, the biggest risk for directors or independent directors is fraud risk by the promoter or by the company, right? I mean, so it is important for the independent director to know the company and the promoters very well. If suppose you are a director on on a completely unknown company and you're not doing your due diligence before, that is going to be probably very fatal. I mean, in fact, recently somebody has pointed out, or Sucheta Dalal has pointed out, the instance of NISA Technologies. I think many of you can go and read up of how an independent actor really had to face the brunt of a fraudulent company and the promoters. So it is important for you as a director to do the due diligence when invited by any board. One, obviously, if it's a completely unknown company, it's very risky. Okay, you have to go to at least a known, at least a second degree of due diligence has to be done. You have to know somebody who knows that company or the promoter, and then only I would think there is a element of this one. Obviously, these data banks, etc., help to some extent, but I don't think a data bank can do a due diligence. Okay, and I don't think we have evolved to the. Obviously, the large companies nowadays are hiring headhunters who do a search for even independent directors, etc. But the small unknown companies which don't yet have a standing, which are getting listed in the stock exchanges recently, don't have a legacy, etc. How do you agree to be on those boards? I think is only through due diligence.
Thank you, Sriram. And you have raised a very interesting point, like, the big companies who can hire the headhunters for, finding out independent directors, but yet there are a number of mid-cap companies at the same time in India uh, who cannot really afford the headhunters for, by spending a huge sum of money and then searching for a professional who can act as an independent director. So what we feel, and that's what precisely our objective was also in our mind at the time of initiating or conceiving this thought of initiating this data bank, that it is not just for testing them or helping them to build their capacities, but also to help them find out opportunities, especially for those who are really passionate to contribute. So this is one of the economical sources for the companies, and that's how I'm very proudfully sharing that around 1650 plus companies are already with us, which are listed out of the total universe of 6,000 companies who are there in listed domain. So that's a very economical way, and that was the precise purpose of doing this. And yes, of course, I understand objectivity is important. Having a fair understanding of the business domain and the business profile is important. Having understanding of the financial issues are important. Having a highest level of commitment is important as per the Schedule 4 in terms of the code of conduct which the Companies Act prescribe, or otherwise the LODR prescribes. But yes, it rests much with the independent directors to choose as to how carefully they really choose a company to be on board with, so that they don't feel an embarrassing situation of leaving the company, as Amit was referring to, after joining and then 6 months realizing that they are not gelling well with the company or the culture which a promoter has set in the company and working with the board. So that's quite interesting. Now I would like to, I think it's 6 and we need to close in further 10-15 minutes. May I request Dr. Tara, to quickly take up a couple of questions.
Definitely, sir. Definitely. There are certain questions on my screen.
We can take up those questions which have not been addressed during the part of discussion, and I think we can use the expertise of our speakers who had been kind of sparing their time.
Definitely, sir. I'll take the first question.
Dr. Gupta, it is my name is TV Rao.
How are you, sir?
I am good. But can
I hope
I take a minute and give some perspective to what is already spoken?
Yeah, sure. You can. We were together in GP Rao's conference. I hope you remember ISTD.
Yes, yeah. I tell you, there is a lot of talk about this promoter-driven companies and independent directors have to fall in line with them. This type of talk, mostly I have seen it within many fora. In fact, I tell you one of my example to drive home the point. In fact, in one company who invited me to join the board, the first thing I have told them is, the promoters to resign from the company if I have to join. I'm telling you, it happened. In fact, one promoter representative was on the board and all others are non-executive directors are outside. The company is running well. Why I am telling this is, it is not that the promoters don't want their companies to be run well. They also see the value in running a company. In fact, they want to bring, today it is a small company, they want to bring it as a bigger, large institution. There are a good number of such people. In fact,
Yes.
and second thing, as an independent director, we need not always think that the promoters are bad people. They don't need to oppose anything.
Absolutely.
In fact, there are companies where we as an independent director, we don't open our mouth because the company is running well by the promoters. Let there not be an
Absolutely.
impression amongst people at large.
Yeah,
This
that's right,
has
sir.
to go
So
into the
what's
mind. An independent director is also a director on the board. The common interest is the company's growth. That's my
yeah,
limited point.
that's great, sir. So that's really interesting to share, and I completely agree with your point that it's not that every promoter is bad, or it's not that there is a suspicion where the independent director should look at the company. There are many more good things to come out, and this is how everybody is passionate to take the company to the next level, to the business to the next level. And yes, if they find some good independent directors who are really worthy and skillful in terms of having their orientation towards the business model and the frameworks as well, definitely they can take it too. So, Dr. Tara, can you take up 2-3 questions so that
Yeah,
mm,
definitely, sir. Definitely. First
yeah.
question is from Dr. Anil Dhaneshwar. The question that he has asked is, are there any penal provisions if a company refuses to pass a dividend received from subsidiary to shareholders as per DDP outlined by the company? So this question, I request Mr. Amit to take up.
Sure. I guess what you're referring to is what's happened in Hindustan Zinc giving dividend to Vedanta and Vedanta not passing it on. Unfortunately, there's nothing investors can do about it other than just raise this issue and hope that better sense prevails on the company. But there are no penal provisions on this.
I will like to add on to this. Dr. Neeraj, I will add on to this. See, all depends upon what the company has written its dividend distribution policy. My company had done a report on that, and where we have said very clearly that the behavior of the company, that is Vedanta, in not passing the Hindustan Zinc dividend, contrary to what they've stated in policy, because the policy is very clear that without any discretion, they will pass on the dividend that is received by from Hindustan Zinc. That is one. The second, in our opinion, dividend policy is a contract between company and the shareholder, and the law of promissory estoppel will apply if they do not fulfill that promise. So at this juncture, the shareholders can do only one thing. They can write to SEBI and they write to MCA that the company has not honored its commitment to the shareholder, and then let us see what SEBI does. But I very strongly believe that in this particular case, the board has failed the investor because they have not honored the policy.
Great, sir. I hope this answers the question. Sir, second question is, Mr. Gupta, for you only, asked by Raghuvir Parik. His question is, how can retail investors assess advisors of proxy firms before voting?
See, there are a couple of issues. First, I think Amit and my firms, we are releasing on Twitter our recommendation only. Unfortunately, we cannot give full reports to investor because then my clients who pay us, they will also stop paying us, and all three will have to close down our company. So we cannot give it free of cost to them. But in what I have proposed a system where the investor should be able to access our reports, but somehow that system is stuck in regulatory rigmarole and it is not getting through. But my firm's plan is this: in long term, we want to give all our reports free of cost to individual investors. In the long term plan, it is there. I hope one day it will fructify.
Great, sir. Great. My third question is by Mr. Arvind Gupta. His question is, the present requirements of a company or entrepreneur are how to sustain, grow in the near future. So I would request Mr. Sriram to comment on this.
No, I think different industries are facing different, I would say, impact of the present scenario. I guess he's talking about the pandemic. Okay, in fact, some companies have been positively affected by it, including all the IT services firms. Today, Infosys result is phenomenal. I mean, much ahead of expectation. Last week, TCS was also much ahead of expectation. So we have to analyze again industry-wise. So I would leave it at that. I think different industries have responded differently. And as I said, for directors, obviously, what matters is that in future there are going to be many such unknowns. I mean, so how does a company prepare for unknowns? I think that is the essence of a good board, to have good risk management practices in place, and for directors also to enhance their knowledge on the newer issues that are coming up. And of course, there will be a lot of unknowns in future.
Great, sir. Great. So looking at the time constraint, it's already 6:15. So probably we'll have to end our session here itself. So I would request Dr. Neeraj Gupta, sir, for a closing remark so that we can close the session, sir.
See, it's like I tell you, corporate governance is an emerging domain in the country. Many of the facets which the West has seen and what India has seen have escalated in terms of their appeal and in terms of their implications, in terms of registering changes. Proxy advisors, and especially the three we have invited, SES, InGovern, and IIS, all three, and all three are my dear friends, have really contributed well. And as I will again would like to go to the basic point, see, there is a lot of research. It's not just the recommendations to the shareholding groups. It's not just the recommendations to the institutional investors. There is much more which they engage with. Either it be ESG, either corporate governance scores, or it be the practices of the corporate governance, how they are really progressing. And as I very well said in my initial remarks, even Dhritarashtra was needing Sanjay to demonstrate and explain the situation as to how the Mahabharata is going on. So proxy advisors are really the eyes and ears to the uh, institutional investors, the shareholders, the retail investors, and other shareholders as well, including the independent directors who are really instrumental and acting on the boards. So they need to be very cautious in terms of it. Of course, there could be some disputes, and we have seen that in the past where the companies have not agreed to the reports which the proxy advisories have passed and casted. There is yet to see the time when the proxy advisory firms in India gonna compete with global like ISS or Levis or others who have a major market share. But yes, there is much. I mean, I could see much happening in terms of dependencies of the foreign institutional investors on the Indian firms, and they are doing fairly well, making a very judicious kind of role in terms of making the whole spectrum of people who are interested in corporate governance in India, making aware and help them understand the progressions on these aspects. So this is really interesting, and we have learned in terms of their perspectives as to what exactly the companies look for in a professional to be on board, the kind of objectivity and kind of knowledge in terms of the domain specific areas, and the kind of interferences which are required. And yes, I would like to give a last message to the members of the independent directors portal that, of course, it's good to be anxious. It's good to be keen to join a board, but you need to be very careful, very conscious in terms of selecting a board before joining, because being an independent director is a matter of pride, of course, but yes, it comes with larger responsibilities. It has a great onus on your shoulders, which you have to respond, and there are larger implications which come on the way where you perform. So if you really find that you are keen to take it up, and if you really find that you really justify that particular position and really contribute, because what matters most is the national interest, and a national interest goes with the growth and prosperity of the corporate sector. So if you can contribute well, we definitely welcome, and we'll keep on organizing such conversations, dialogues, and discussions.
Dr.
And
Neeraj, Dr. Neeraj, I have to make one more point.
sir,
Okay, see, you were talking about how well we should compete with ISS and Glass Lewis. I would like to tell you that while we may not be equal to the size that they have, but certainly as for the quality concerned, the Indian proxy advisory companies are faring very well and maybe better as compared to our global peers. So we may be small in size, but we are not small in our quality. If you read our report, compare our report with the global people, you will find that all three of us are doing better than them. And the other thing I want to say, that anybody who is interested in Vedanta report can log into our website and see Vedanta report.
no, I completely agree, sir. Like, it's not, see, every time it's not the size which matters. What matters most is the impact. What matters most is the objectivity. What matters most is the commitment. What matters most is the passion. And I'm really appreciative of this fact that IIAS, SEC, and InGovern are doing wonderful services in the country. Of making institutional investors, shareholders, directors, and other stakeholders aware of their reports, and the kind of mandate they have been offered, or the kind of mandate which the proxy advisory firms has, specifically in light of the recent SEBI regulations. Also, what I see you guys going beyond it and making good watch of the corporate governance practices, coming out with interesting research reports, either on independent directors, either on scorecards, on diversity, on other aspects. So that is something which is really exciting and encouraging. And what I expect from independent directors also, because that was the core purpose of making a humble request to all of you who are an expert and sparing your time, is that to make the independent directors understand that the kind of reports you and your firms are bringing out are really very useful, and they should refer to it. And I'm sure they would find it quite insightful, encouraging, and that would help them really bringing better effectiveness in the boards. So, with this, I would like to thank all the three panelists, Amit Tandon Saab, Jayan Gupta Saab, Sriram Subramanian Saab, for sparing very valuable time and honoring me, because all three are great friends of mine, in sparing them time, because it's quite a busy schedule. And also thanking uh, all the independent directors who have joined us. I could see some of my good friends who have joined interacting with us. I understand that there are many questions which have been left out. I would request Dr. Tara to take up those questions and put our members across the proxy advisors, so that they could learn more, they could learn more from the insights, and they could excel in this job, because our ultimate motive of establishing this independent debtors data bank is, of course, it has been cursed a lot, establishing a test, and of course, all three have helped us, specifically Jain Gupta Saab. I would like to, thank him for that. But yes, this is going to be a long way because independent director profession itself is a very challenging one, and which requires a lot of dedication, a lot of ethics, a lot of integrity. It's not just the code of conduct of Schedule 4, which requires them to qualify for that, but it is the real performance which requires a demonstration and exemplary demonstration, in fact. So I would like to thank you all for joining us. I would like to thank all three panelists for joining us and enlightening us, and definitely it has given us some very substantial threads to pick up, which we would definitely be keen to take it up further. And I would request them all to spare some time so that individually on individual threads like ESG, shareholder activism, the cautious which the independent directors have to put in terms of select and the boards more. Thank you.
Thank you, Mr. Gupta.
After a long time.
Thank you so much. Thank you so much. We are ending the session.
Thank you.
Thank you so much.
Very much. Thank you, everyone.
session.
Bye.
Thank you.